5 explosive themes enter the end of 2026. Hello, I really don't know where to start today because we have mountains of materials to pass on. These 5 themes are preparing for a possible explosive rise at the end of 2026. I will take you through each theme and the specific stocks in the space I think we can absolutely run. In addition, there have been some crazy headlines in the past week that will affect the way the market trades for months. Now it is a little unstable outside. You're starting to realize that when reports surfaced that about 9 countries had nuclear arsenals and countries were quietly developing more advanced weapons, we were operating without maps. No one has a strategy right now. Here are the tensions that each investor feels in 2026. When the inevitable pullback arrives, large-scale acquisitions of popular brands that never seem to give up climbing can get you in trouble and ruin a portfolio for years. Go in the opposite direction and put everything under cash or sleepy dividends, and you'll miss the theme of quietly creating millionaires while waiting. Both extremes hurt you, and real wealth comes from the middle path, which is much harder than it sounds. Most important, inflation is rising again. Mr. Trump recently sat down with the Chinese leadership. A war is still quietly brewing behind the scenes, and Iran appears to be advancing its nuclear program, even during the so-called ceasefire. So, if a market reversal is imminent, how should we really invest? In my opinion, one of the smartest things you can do in such a turbulent environment is to surround yourself with serious investors who will keep you grounded and responsible when the mood is high. This is the foundation of my patron community. We now have more than 800 members. Live chat every day. People can share what they are buying, pruning, and seeing in real time. And I want to give it to one of you for free throughout the year. How it got in. Every other Monday, I send a free newsletter, always free. That includes the stocks I'm watching and buying, and a clear breakdown of this week's biggest market story. The registration link is in the instructions below. Anyone who joins before the end of May will automatically enter, and I will broadcast the winner live on the channel. Let's get started. My name is Nolan Goa. My students call me Professor G, and I set up this channel to make it easy for ordinary people to invest. All investments are risky. Do your own research. This is not financial advice. I am not a licensed financial advisor. Before I touch on 5 themes and 5 stocks, we must first talk about the reality of the market. Because as a finance professor, these numbers are really unprecedented, and valuation rates are completely out of chart. Warren Buffett has been discussing the issue lately, with some excellent reports detailing why Berkshire Hathaway currently holds about $420 billion in cash, just sitting outside. People have been asking why Buffett doesn't use cash, especially as AI and quantum names soar week after week. The honest answer is straightforward. Because the market is now overvalued by every traditional metric. Ask quick questions and put them in the comments below. Are you buying now, waiting for a real drop? Or are you just spending an average of fundy on noise? I really want to know what other viewers can learn from what the community actually does. Take Shiller PE in the S&P 500. In a normal, healthy environment, the rate ranges from 18 to 20. It is now at its second highest reading ever. And the only time it has climbed higher is the absolute peak of the internet bubble, which is approaching that record every month. There is also the Buffett Index, which compares the total market value of the United States to GDP. And historically, when that number exceeded 120 to 140%, investors began to feel nervous about overheating. Today, our share price is about 235%. We've never been here before. But that is my honest view. You're not Warren Buffett or a Berkshire Hathaway executive. And just because he is holding cash doesn't mean it is the right choice. for 30-year compound interest for decades to come. Buffett himself acknowledges that he does not fully understand the many technologies that lead the market, which is a huge reason Berkshire is completely away from AI trading. This is a modest move, not a bull market. Apple was his exception, and even so, it took him decades to recover. Let's turn to new technologies that are rising and don't seem to slow down anytime soon. I will give you a theme and then put a stock I personally like in each theme. In my view, the 5 themes driving potential gains at the end of 2026 are AI infrastructure and power, quantum computing, robotics, and physical AI, space infrastructure, and data center expansion. Starting with AI infrastructure and power, I chose Nebius Group, one of the more aggressive pure businesses in the field, whose recent revenue has increased nearly 9 times year-on-year. As the demand for AI cloud capacity has become vertical, they are pouring billions of dollars into GPU construction and power capacity to meet supersized demand. And Nebius could be a huge beneficiary if AI capital spending continues through 2026. For quantum computing, I chose IonQ, while the entire quantum field is still in a very early stage, which means volatility is brutal in both directions. They are one of the clear leaders with real corporate partnerships and growing institutional attention. But if quantum technology gets real traction, IonQ is likely to become one of the most defining names in a decade, as recent activity around quantum network trading has forced investors to refocus their attention on the field. Robotics and physical AI remind me of Symbolic, a large automation company focused on AI-driven warehouse systems. They are already working with some of the world's largest retailers, and the backlog of orders gives them strong revenue visibility for years to come. To be honest, once the software wave matures, physical AI becomes the next stop in the whole AI story. And Symbolic is in the middle. Space infrastructure took me to the Rocket Lab, which is evolving from launch to a full-fledged space infrastructure company. The bull market here is that space will become a real area of industrial growth over the next decade, with the simultaneous expansion of satellites, defense contracts, communications, and even lunar infrastructure. When it came to data center expansion, my choice was Vertiv. It is a less glamorous name, but it may be one of the quietest big winners in the overall AI construction, because AI data centers require a lot of cooling, power, and electrical infrastructure to function properly, and Vertiv is directly on the path of such spending. Investors underestimated how much physical infrastructure would need to be built to properly expand AI. Which of these belongs to your portfolio depends entirely on your understanding of the macro picture. So let's focus on 2 major news reports over the past week. The first is the path of inflation and interest rates. Inflation was higher than expected this week, and bond yields rose sharply. This is important because sticky inflation further pushes the Fed to cut interest rates. And, in some cases, raising interest rates will completely return to the topic of discussion. The 10-year Treasury yield has climbed to levels historically associated with punishing high-growth stocks. At present, the market is dealing with sticky inflation, rising oil prices, lengthening valuation, and the Federal Reserve's time to maintain restrictions. AI optimism is pulling the market in one way, and real macroeconomic pressures are pulling it back in another. And the battle is defining the whole market. Second, trade tensions with China are making headlines again. Mr. Trump's trade rhetoric again moved markets this week, with a new round of tariff negotiations, new export controls on advanced AI chips, and high-level meetings between American and Chinese officials. Semiconductor stocks are extremely sensitive to all this, because China remains a huge buyer of global AI hardware. The market is focused on chip export restrictions, the possibility of new tariffs, broader U.S.-China relations, and supply chain ripple effects. All this has hit Nvidia, AMD, Broadcom, and basically all semiconductor brands related to global AI demand. More broadly, the entire market is now being driven by huge tensions between AI optimism and inflation and geopolitical risks. To be honest, I don't think this fight will be completely resolved. Before any real trend emerges, we fluctuate wildly in both directions. That is why spending time with like-minded, savvy investors is more important than ever in recent memory. Don't forget to grab the free newsletter below and take a year-long photo in the Patreon community. Until next time, keep investing simple.